always speaking about trading stocks. Today I will bring you something more risky than trading stocks. Okay, so this thing or this vehicle that you use in order to do your trade is called options. Okay, so what are options and how do you trade these options? Now, option is a contract. Okay, it's a contract. It has time value and intrinsic value. It means the stock, for example, let's give you an example. The stock is $10, and if you buy 100 shares, which is the lot, 100 shares, you will spend $1,000. Okay? This is a regular thing. When you trade, you buy stocks, so you have $1,000, you go to a stock which is $10 and you buy it. Done. Okay? You buy this stock. Now in option, they give you something good and something bad. Okay, what is the good thing in option? Instead of buying these 100 shares with $1,000, they will sell you these 100 shares with, for example, this is just an example. You can check the options and you see how much is it. They can sell you this 100 shares with, for example, $50 through time. For example, they say 1 month, 2, 3, 6 months, okay, or a year. It depends on the strike, okay. It depends on the time that you have that you do. Okay, so this is the beauty of options. The thing that it is good in options is that it's so cheap. How can something is sold $1,000? You buy it with $50. It's unbelievable, unbelievable. Okay, and you say to yourself, this is a good thing. I should buy options. I should never buy stocks. Okay? Why should I buy stocks when this is 50? I control $1,000. Okay? This is the good thing. Now, the time value is they sell you the time, which is something that it is like when you think about it. This is the bad thing about options. Okay, first, time value. In the price, okay, in the price, they will sell you the time. Sell the time for you, for this option. They sell you the time. For example, 2 months is more expensive than 1 month. Okay? It's more expensive. You should pay for this. That's why when you buy option, you see that some of the money that you buy with is just time. The more you want to stay in the trade, the more you want to stay. 1 month, 2 months, 6 months, 1 year, 2 years. Okay? The more you stay, the more you pay. It will become more expensive. Okay? Become more expensive. So, this is the first thing. Now this by itself is bad in the options. Why? Because they sell you the time. When you buy a stock in a trading, you buy a stock And for example, you buy, let's say you buy any stock, like for example Google, and you want to keep it forever, for 1 year, 2 years, 3 years. You don't pay something to keep it, okay? They keep it free for you, so you don't pay for time. Now, an option, the bad thing is you are paying for time. The more time you need to stay in the trade, you should pay. Now, you don't pay that much, but you should pay, okay? You should pay more and more. $50, you can pay 100. Maybe if you need 6 months or something, okay? And this time that you buy, they sell you the time, this time is going less and less and less and less until it is worthless. Worthless, it means there is an expiration of this option. They always, when you go to option chain, you find an expiration. Okay, expiration, it means expiration. It means when the option is worthless. Okay, so and there is what you call intrinsic value, which is the value of the stock. Okay, now these options relied on the stock itself. Okay, so the stock, for example, is $10. XYZ. This is the name of the stock. So the options follow the stock. If the stock goes up, in the option you make money. If the stock goes down, you lose money. Okay, it's the same as a trade. It's the same. But the problem is that, as I told you before, is this time, it means they sell you the time, and it means they can kick you out from the trade on certain time. Okay? Now, this is one thing. Now, second thing is that options are more risky. It's too much risk. And please, I will ask you to do something. Please go to some videos and check them, check options, and they will tell you that options is the good choice and it is the same as trading. No, stocks. Options is not the same as trading stocks. I will show you. For example, the stock is $10. The option, let's say, is 50 cents. Okay? 50 cents. And this is $10. Now, if the stock go down with $1, it becomes $9. It go down. There is a lot of calculation, so you don't lose. For example, here you lose 10% from the stock, from 10 to 9. But here, it's not the same. You can lose here 20% or 30% or 40%. There is calculation that shows this. That's why the options are riskier than buying stock. Okay? And another thing that it is risky is that you buy time. Okay? You buy the time and you have more risk. That's why if you are trading options or something, you see that when you are wrong, the options price, they go down more than the stock itself. Okay? It goes very, very quick. And even if the stock goes up, it goes good, but it is not the same. For example, if you lose here $1 from 10 to 9, here you don't lose $1 because it's just 50 cents, you lose less. But the problem here is that you lose less. Now there is another problem that I will tell you about options. Okay. In real trade, what did I tell you? $10, 100 shares, 1,000. Okay. Now you buy an option with 50 cents. Okay, it's $50. $50. But you tell yourself, almost all the people who use options, you can buy one option, $50. But you say to yourself, $50, if it goes to 60 or 70, whatever dollars, is not that much money. Okay? That's why what the people do, they buy more because they think it's cheap. For example, you say to yourself, okay, I have $1,000. I will buy all my money with options because if I am right, I will make money, which is true. It is true. You can make money with options, but you should think always of the bad situation when you lose money. Okay, this $1,000 you buy, for example, we say 20 options. 20 options is with $50 each one. Okay, you will have $1,000. You spend $1,000. Now, when you are good, you can make 200, 300, 400, 500, or 1,000. Depends on the stock. When it goes up from, for example, it goes from 10 to 15 or 20, or it depends on the stock. So you see that your options are making a lot of money, which is very, very good. All the people like it. But the people, they don't like something else. When the stock goes down, you see that this 1,000, it doesn't go so like slow. It goes bad, very, very fast. You lose here $1 from 10, you go to 9. Maybe here you lose $200 or 300. It goes more, you lose more, and you lose more. That's why it is more risky. Anyone who tells you that options are not risky, are the same as stocks or are better, he is, I don't say he is lying, but he doesn't understand too much what is an option. Okay? So please, if you see my video about options, go to other videos. If you find something which is different from what I say, you should be careful. There are things that a lot of people online, I see a lot of videos, they don't tell you. They don't tell you how much risk you are risking your money. They tell you always the good things. Okay, we know the good things. If it goes up, you will make too much money on the return of your investment. Return of your investment, you will have a lot of money, which is very good. But if you are right, but suppose that you are wrong, and even if you are right, it goes up, and one day or two it goes down. These options it go bad so fast. Okay. Now this is I'm just trying to give you a general idea about options. Now in the options there is what we call in the money and out of the money. Okay? For example, the stock is $10. if the strike is $9, it means the options begin with $9, so you are under $10. So you have $1. We have $1 good. That's why you find this strike is more expensive than one which is 12. If the strike is $12 from the stock, which is 10, 12, the strike is 12, it is out of the money. It means when you buy this, you buy only the time value. There is no intrinsic value. Here we have $1 intrinsic value. That's why a strike with $9 and the stock is 10, so you gain $1. That's why here you find it more expensive. Here you find it, if the strike is 12, you find it just less. So it's cheaper. If you know that the stock will go after 5 days, 6 days, or 1 week, or 2, or 1 month, it goes more than $13 or $14 or $15, you will make a lot of money from this. But if the stock doesn't go to $12 or $12.50, all your money by the expiration will go, because the time value that you buy the time value, and you will lose the time in the expiration, and your option is worthless. It's zero. You have nothing from, because the stock doesn't go to 12 or 13. Okay? This is the strikes. Now, the options behave the same as when you buy stock. It means it can go up, it can go down. Okay? This is $10. It can go to 11, it can go to 9. Just an example. If you think that the options and the stock is going up, you buy what we call a call option. If you think that the stock will go down, it means you're shorted, it's called put. By the way, put is the same as shorting the stock. But it's easier. Okay, it's easier than shorting, because shorting, you borrow the shares and you cover them. You cover back. It means you give them back. For example, shorting, you buy by 10. If, for example, the stock goes to 5, you have $5 for each share. But you should buy the shares here at 5 and give it to them. Give it to the broker. This is called cover. Cover the short. Cover the short. But the put here, this is in the stocks. Put, you don't cover, you don't do nothing. You just buy. If it goes down, you make money. But if you buy a put and the stock goes up, you lose the money. Okay? If the stock goes up and you buy a call, you make money. So options are easy. Easy, but a lot of people are confused about it. But the options are very easy. The most important thing, what is it? Is it going up or going down? Like stock, is the same. But the beauty, the thing that it is very nice in options is that if it goes up and you buy a call, you can make too much money, and this is very good. Now, if it goes down and you are going up and goes down, you lose a lot of money. And I will say again, options, you should never go to options when you don't know how to trade stocks. For me, you should begin with trading stocks. When you are good, you begin to make money from stocks. And then you go to options or you go to futures. Okay? So this is just an advice. Please, if you have a question about understanding options, or you have a question, specific questions, just ask. There are a lot of, when you have options, there are a lot of things that they give you information, but believe me, Nothing, all the information they give you is worthless. Okay? You cannot use all the information they give you in the stock chain. What is important is the stock going up or going down? If you buy a call, you are making money, too much money. If you are doing a put, you are losing money. Okay? This is the same as trading stocks, but we have more risk than trading stocks. Okay? Thank you very much for watching. If you have questions, just please ask. Thank you.